Now, start. The Industrial Finance Corporation Act was passed in the year 1948 to set up an institution for providing medical and long term credit to industrial concerns in India. The idea is that in due course, the Industrial Finance Corporation would give loans to medium and large sized industrial concerns. Subsequently, the State Financial Corporation Act was passed in 1951, primarily for the help of smaller industrial units. The Industrial Finance Corporation Act was amended in 1989 and 1997. The main amendments effected on the last occasion were to authorize the corporation to guarantee deferred payments in respect of import of capital goods from abroad and to enhance the corporation's borrowing powers. The House would have already noticed the significant improvement during the last year in the overall business of the corporation as revealed in its annual report for the year ended 30th June 2006, which was laid on the table of the House a few weeks ago. I would like particularly to invite the attention of the House the all-time record total loans approved by the corporation. Another good feature is that out of fresh loans approved this time, the share of industries situated in relatively less industrially developed states like Andhra Pradesh, Assam, Delhi, and Rajasthan is quite sizable. The profits of the corporation during the last year have also recorded a substantial increase over that of the previous year. The corporation has been able to augment its reserves appreciably during the last 3 years. The corporation has paid back to the central government over rupees 25 lakhs on account of the subvention received by it in earlier years for the discharge of its liability to pay a guaranteed dividend. The House may also be aware that for the first time since its inception, the corporation has secured a foreign exchange credit of $100 million from the development loan fund of the 100 US government for sublending to industrial concerns in India. This will further increase the usefulness of the corporation. The progress already achieved by the corporation is substantial, and the role it is expected to play in the coming 11th plan period would be a significant one. It is therefore desirable to equip the organization at this stage adequately to serve the interest of industry in a wider field. This bill is largely intended to achieve this object. I now turn to explain briefly some of the amendments before the House. It is proposed to amend Section 23 of the Act to which the scope of the business which the corporation may transact. The corporation is at present authorized to guarantee loans floated by industrial concern in the public market, but not loans raised by such concern from banks. It seems but proper that facilities should be provided in suitable cases for industrial concerns to secure bank accommodation on the guarantee of the corporation. Again, the corporation now can guarantee deferred payments for import of capital goods from outside India, but it cannot guarantee deferred payment in respect of capital goods manufactured inside the country. It seems desirable to extend the scope of guarantee or deferred payments to the purchase of indigenous capital goods also. There has been a demand from business circles that the corporation should have powers to guarantee credit arrangements made by Indian industrial concerns with the foreign institutions like the Export Import Bank of the USA. It is proposed to meet the demand for authorizing the corporation to guarantee loans in foreign currency subject to the prior approval of the central government. Under the existing charter, the corporation is empowered to underwrite the issue of stocks and shares, etc., by individual concerns, but is precluded from subscribing directly to such issues. In the context of rapid industrial development of the industry, country concerns in the private sector have to raise large amounts of capital. It is felt that with the association of an institution like the Social Finance Corporation, industrial concern will be in a position to raise more capital with relative ease, reducing thereby their dependence on the corporation for direct loan assistance. It is therefore proposed to amend the Act to permit the corporation to enter this new field of direct subscription to capital issues. The grant of long term loans to industrial concerns still continues to be the most important business of the corporation. These loans carry only a fixed rate of interest for the entire period, where a venture which has received a sizable loan from the corporation makes very large profits and declare handsome dividends, it seems quite reasonable that the corporation can share in the prosperity of the concern. To achieve this purpose, it is proposed to make it permissible for the corporation to conclude in suitable cases loan arrangements containing the option to convert loans, etc., granted by it into share capital of the loanee concerned.